The markets, back to the money. Michael Lee with us this morning. Look, Michael, Bill Ackman, he says that a more aggressive Fed or a market collapse, he says they are the only ways to stop this inflation. What do you say to that?
Well, considering his track record of making these yelling fire in a crowded movie theater type calls, the last time he made a call like this was right after we bottomed, the markets bottomed during COVID, and he personally and his hedge fund got very long the market. So I'd say, if anything, that's a pretty good indicator that inflation has probably peaked. I think the Fed, although they've only raised rates 75 basis points, they've talked the market into believing that 10 or 11 are coming. Credit spreads have moved out substantially. A ton of liquidity has come out of the market. The NASDAQ is down almost a third this year. Bonds are down double digits. You've seen tremendous demand destruction. We had a contracting economy in the first quarter. So I'd say inflation is still an issue, and I don't know when it will subside completely, but I would say that the worst is probably out of the way, and how long it takes to fizzle off, I think, does depend on how much the economy slows down. I mean, look, you got two ways of solving inflation. You can either create more supply or you can destroy demand. And so it seems the only tool that's being used right now is destroying demand, and we're starting to see that. And that's a big reason why Snapchat had such a profound impact on the market, because ad spend, particularly on one of the most effective social media spaces, was down dramatically, and they don't see it picking up, which means advertisers, consumer end demand is waning on certain levels. So I think we're headed for a slowdown. I think the markets, we're near a near-term bottom, right. And I don't think this is going to be a classic bottoming out like a lot of people are looking for, where there's total capitulation, because we now have the balance sheet runoff, which is going to put an overhang on stocks. So I think we're going to be in a violent trading range for the next 6 to 24 months until the Fed essentially pivots. Ouch. And once the Fed pivots, then I think we're off the races again.
Okay, last one. Is there any big tech stock, I'm talking FANG stocks now, is there any one of them that you would buy today?
Yeah, I would say Facebook and Google. So both of them. Okay. These companies aren't going anywhere. I'd say Microsoft is still trading at a pretty high PE multiple. Google's always cheap. It's not going anywhere, but Facebook, you're paying a below market multiple for one of the most dynamic advertising platforms ever created. The user engagement is higher there through Instagram than anywhere else.
I've just gotten used to calling it Meta after all these months, but I still respond to Facebook. Mike Lee, thank you very much, sir. We appreciate it. I'll see you again real soon.
Thanks, Stuart.
There are some stocks that